5 digital currency trading tips for Aussie investors. By 2021, the global cryptocurrency market was valued at 10.3 million US dollars, and these figures are expected to increase at a compound annual growth rate of 11.1%, such that the value in 2028 will be around 1,902.5 million US dollars. That tells you that there is a lot of money doing rounds in the digital currency arena. You would want to join crypto traders and likewise take home some handsome profits, as some of them do. If you live in Australia and are interested in trading digital currencies, here are some practical tips for your consideration. 1. Choose a reliable crypto exchange. Although it's extremely difficult to quantify global crypto exchanges, expert estimates reveal that there are currently more than 500, and the number is rising rapidly. With such a wide range of options, you would want to know how to choose one. Sites such as Best Crypto Exchange Australia have in-depth analysis of the different crypto exchanges in Australia, so you'd want to check them out. But for a brief outline, here are some critical factors to consider when choosing a crypto exchange. Regulation. Investing with an unregulated crypto exchange is risky. Such exchanges can defraud you of your investment, and you would have nowhere to report the matter since they are not under any regulatory body. So always confirm whether a given crypto exchange is licensed by reputable bodies such as the Australian Transaction Reports and Analysis Centre before you decide to do business with them. Fees. Trading digital currency comes with several fees, including deposit fees, buy or sell spreads, withdrawal fees, swaps, dormancy fees, and more. The higher these fees are, the less profits you take home. And that's especially true with the spreads, since they are deducted with every trade you open, regardless of whether or not you will make a profit. Uh, Regardless of whether or not you'll make a profit. So make a point of analyzing the different crypto exchange to determine whose fees are most friendly. Payment options. In choosing crypto exchange, it would help if you settle for one that supports your favorite payment option. The most common payment options are credit cards and transfers wire transfers. But if you are a fan of mobile payment or e-payment, register with those exchanges that accept PayPal, Skrill, Netella, Cash, or Afterpay. Customer support. If you realize the customer support agents of any crypto exchange are abusive or don't offer you the help that you need, you better walk away as soon as possible to avoid more problems further down the road. Assets supported. According to investing.com, the number of cryptocurrencies at the time of writing this article was 7820. Though it's impossible to trade all of them, you would want to open an account with an exchange that supports as many of them as possible, so that you can pick your best cryptos. This gives you room for diversification. When investing, it's advisable though to keep all your eggs in one basket. Number 2, leverage wisely. Leverage trading allows you to open trades that are much larger than your capital. In essence, the crypto exchange lends you some money to trade with to increase your profit potential. If you are offered leverage of 1:50, it means you can control trades that are 50 times more than your capital. While it's a great way to maximize your profits, it also means that you can make equally huge losses. So don't over leverage when trading digital currencies. It would be best to limit your leverage to about 1:5, even though your crypto exchange allows higher leverages. Number 3, risk a little. For you to survive in the trading game for a long time, make a point of risking only 1% of your account size per trade. There is no denying that you can incur many losses in a row when trading crypto. If you risk just 1% on every trade, it means that you will have to make 100 losses before wiping out your account. But if you risk say 10% on every trade, you will only need to have 10 losses to bring your account balance to zero. Thus, always risk a little for every trade you place. Of course, this approach means that your profits will trickle in slowly, but it guarantees you that you will always have the capital to continue trading even after incurring several losses in a row. Number 4, plan your trades. Trade your plan. There are dozens of strategies and indicators you can use to trade crypto. These include moving averages, support and resistance, channel breakout, oscillators, trend reversal trading, candlestick patterns, relative strength index, divergence, fundamental analysis, or news trading. It's advisable to stick to two and master just one strategy until you become profitable. Then you can try another strategy if you wish to expand your investment approach. And once you decide to use a certain strategy, don't allow emotions to roll over you. Once you are at the charts, have definite entry and exit rules, take profit targets and stop loss levels, and follow them to the letter. This way you can evaluate the past 100 trades and conclude whether the strategy you are using has a profitable edge in the market. If it does, you can continue using it for the rest of your lifetime, but if it doesn't, then it's high time you learned another crypto trading strategy. Number 5, pick a strategy depending on how many times you have. The general rule of thumb in crypto trading is that if you trade the 1 minute chart, you will have to check the charts after every minute, and that applies to all other chart time frames. Thus, if you have the time to analyze the charts every other minute, then you can settle for scalping. This involves getting in and out of trades in a matter of minutes, meaning you'll end up opening dozens or hundreds of trades every day. If you are not wired of scalping, you can still choose higher time frames and have a more relaxed trading day. For instance, if you have a 9 to 5 job, you can consider trading the 1 hour or 4 hour time frames. Better still, you can use the 1 day or 1 week time frame if you intend to buy and hold crypto for several months. The higher the time frame you use, the less hectic the trading is. Conclusion: trading digital currency can turn out to be a profitable venture as long as you approach it in the right way. Your first concern is to choose a trustworthy crypto exchange that will manage your invested cash properly. Then, have a trading plan that comprehensively details your entry and exit rules and acceptable risk levels. If your strategy has a competitive edge and if you follow it to the letter, you will eventually end up profitable.